This is the Financial News Network. I'm Christy Duffy. Yahoo reporting third quarter earnings per share better than analysts expected Tuesday. Revenue, however, was slightly lower than Wall Street had anticipated, and the company's fourth quarter forecast also not as high as investors would like. With me to discuss the September quarter and what's next for Yahoo is the benchmark company's Clayton Moran. Clayton, what do you think of the quarter versus your own estimates?
Yeah, well, first off, net income grew largely because of the sale of Hot Jobs. So that was a one-time gain. Relative to sort of a normalized earnings, the growth was modest. And net revenue was actually flat year over year. So relative to our expectations, the third quarter was a little bit light on net revenue. Certainly was below where the street was. The street was looking for $1.13 billion. They came in at $1.12. The rest of the report was fine in regards to cost control and cash flow. But really nothing to get excited about. And then the fourth quarter outlook was soft on net revenues, more significant than the third quarter miss. It was about 6-7% below what the street was previously looking for. And so, that was sort of disappointing.
So with disappointing results, do you think this quarter will impact the impetus for an acquisition to occur?
I think it continues the pressure on management to find something that will help the company strategically. And the one thing they said last night that to me was a change was their commentary about their Alibaba holding in Asia. There's been a lot of reports and chatter that they should sell that, or that private equity would come in, take over Yahoo, and then sell Alibaba. The CEO, Carol Bart, seemed to open the door a little bit to possibly liquidating Alibaba last night, and that's why I think the stock is up 50 cents today. So I think the poor operational performance does increase the pressure on management to do something strategically to help the stock, and the most clear answer would be to liquidate Alibaba. Now, I'm not saying that that's imminent, or it's definitely going to happen, but I think management is more open to that possibility today than, say, a few months ago.
And what is the company going to do to compete with Google and others who improved growth in display ads?
Yeah, well, they're really trying to use their position as the largest display company online to benefit them going forward. Basically, try to cash in on the fact that they have 600 million worldwide users, and they have a lot of sites, obviously, a lot of different content, and basically try to use their scale to attract premium advertisers to the company. They also are working to innovate here and there to improve the search layout, also to try to target certain audiences more in terms of display. But in reality, we think Google and Facebook are gaining share on Yahoo. In fact, Yahoo's fourth quarter display outlook is only 11% year-over-year growth. That's down from 20% in the first quarter. So we think part of that is harder comps, but the other part is increasing competition from Google and Facebook. And really, there's no answer for Yahoo to sort of stem the gains from those two, because those two are building off small bases, and certainly Facebook has a lot of momentum given that they now have 500 million users, and they're just getting started with monetizing those users.
What's Yahoo doing on the social networking front? They have deals with some social gaming companies, for example, Zynga, which makes Farmville, but will there be any other push?
Yeah, not much too meaningful in my mind. They're trying to sort of enhance their social position through alliances like that, but really it's a portal still, and those are relatively minor content additions to the Yahoo site. So I don't think really there's a strong social element to what Yahoo's doing, at least not yet.
All right, thanks a lot, Clayton. For further updates on Yahoo, make sure you're subscribed to our YouTube channel. This is the Financial News Network. I'm Christy Duffy.